So I want to pick your brain because you're seeing deals every single day.
Yep.
You're transacting, you're negotiating terms. What are you? I know it's been like an up and down roller coaster over the last like year and a half. Like what's your sentiment right now in the marketplace?
Well, I would say that, on the retail leasing side, if you look at Maricopa as a whole, I think the vacancy rate is less than 5%.
Yeah.
So depending on, the trade area, right? If you got a well-placed shopping center and you get a vacancy, you may have multiple offers in on that vacancy, right? Which just
because you do a lot of landlord and the tenant side, so you're seeing both.
Seeing a little bit of both, yeah. That's on, more the landlord side, those who own commercial properties. And then on the tenant side, if you're seeking out these pads, I mean, it's tough. It can be tough to find opportunities just because, that game right now is so hot with, really the coffee players who've pushed it, but, all these
Chicken
QSR guys, the chicken guys.
Isn't it crazy? We have a full chicken category and like the coffee has created another category just in drinks, like energy drinks.
Can't tell you I understand it, but
what do you think
sales are telling otherwise?
Fundamental wise, do you, like, in your personal opinion, do you feel like we're good? We haven't overbuilt because, I mean, obviously here in Phoenix, we've got a huge population influx coming in. But I mean, when you see the landlord side, less than 5%, that's incredible, but it also starts to push rents up. So from the tenant side, do you feel like we're still in balance? Do you think like fundamentals are getting a little skewed?
I think fundamentals are definitely getting skewed on some of this newer development stuff. I mean, where you're seeing, rents being pushed to 55 plus a square foot. I just can't tell you that for shops.
Yeah.
I just can't tell you that I understand it. I mean, how do you go make those numbers really work? I mean, you could go into a center in Scottsdale where they're still in the $35 range.
I'm underwriting our new construction at 45.
And that's not bad. 45 is the new normal.
Because I know it's at 55, I'm underwriting at 45.
There you go, yeah.
With a $50 TI.
Yeah, yeah. But look, I mean, tenants are paying these rents.
Keep that in mind for some other shop tenants on Chandler and Cooper.
Yeah. No, I will. Yeah, for sure. But
shameless plug.
But it's just like, how it's okay. Okay. It's great that you get the deal signed up, but how viable is their business going to be? Like, do some underwriting. If their average sales are X and they're being charged, a rent to sales threshold of 10, percent or more, it's like, I don't know. It's a little questionable, but time will tell.
Makes you worry about who's holding it when the music stops.
Yes, exactly. And I think that says it all right there, because I think most of these merchant developers come in, they build it, they stabilize it, and if tenants start to fail 2-3 years, they will have sold it and moved on. But
so going back to your tenants, you guys have like regular calls, you talk to them. So, from kind of like, obviously without giving away any secret sauce, what kind of things can you share that you're hearing sentiment wise from like the retailers and the tenants when you guys have your conversation? Do they express concerns? Do they tell you like, they obviously the two types of tenants you're working with, they're needle movers. So like McDonald's did this whole change their format and their prototype, and now all of a sudden like the top 50 QSR list came out and their average unit volumes were like 4 million plus for the first time. Like, I know they've gone through some hardships. So do you hear like any kind of cool market information? Like,
nothing that I can speak to specifically. I mean, some of our tenants are going gangbusters, looking to expand by multiple units. Others are going through some pain points, but whether you're regional or a corporate driven tenant, you're going to always be looking for deals.
Yeah.
Right. Like at the end of the day, if you're publicly traded company, for example, I mean, you're
going
to always need to
profits is opening new stores.
Yeah, you got to always continue to keep, the spigot open and deal flow coming through. So, but what I'll tell you from a grander perspective is, what we're hearing is, there a lot of groups are looking at Phoenix as a whole, you know, whether they're already here or looking to come be new to the market.
It's almost like we're insulated to a little bit.
We're a little insulated. Yeah. It's funny because we were hit the hardest in 2008, but like, you know, I think we're now insulated from that, you know, because
of all the housing growth.
Yeah. All the housing growth.
Weather's
and
nice.
In-migration and
we just need to plant more plants on our projects and keep the temperatures down.
Yes. Yeah, exactly. I know it's hot here for sure, but people are looking past that, right? I mean, our cost of living's definitely gone up since living here for as long as I have. And yeah.
Thank you so much for watching this video. If you like this video, want to catch the entire episode of this Rent Stew podcast, click right here. If you're loving the Rent Stew podcast and you want to see more episodes, click right here. And as always, stay hungry, my friends.